valuable insights. Registration Committee, Advocate Harish Shah sir, to escort Vaitheeswaran sir onto the dais, along with Advocate Vasant Patel sir, Advocate Pritesh Gandhi sir, Advocate Rakesh Thakkar sir, Advocate Harish Shah, Advocate Jignesh Shah, Advocate Ramesh Kachrani sir, Advocate Nitin Vadodaria sir, Advocate Sunil Keshwani sir. I would request one and all to kindly keep their mobile phones on silent mode and maintain silence so that we can begin with the session as soon as possible. We welcome you all onto the dais. This is the last and the final call to begin the 5th technical session. Kindly take up your seat and maintain silence. Sir, it is an honor to have you amongst us today. Distinguished guests, esteemed colleagues, and members from the professional community. It is my privilege to introduce Mr. Vaitheeswaran sir, a seasoned advocate and a tax consultant with 33 years of rich experience. Sir holds degree in law, cost accountancy, and company secretarial practice. His expertise spans a wide range of areas, including domestic and international tax, GST, FEMA, RERA, and company law. He is a prolific author, having written seminal works on VAT and taxation in the digital economy, and a sought-after speaker at the national and international conferences. Mr. Vaitheeswaran serves on the Advisory Council for GST for the Government of Tamil Nadu and is the chairman of the Expert Committee on GST for the Madras Chamber of Commerce and Industry. We are honored to have sir with us today. I extend a formal welcome to Vaitheeswaran sir, and I request Advocate Jignesh Shah sir to present sir with a book. Thank you, sir. I now request Advocate Harish Shah sir to felicitate Vaitheeswaran sir with a memento. So kindly accept our token of gratitude. Thank you so much, sir. Honorable sir, the esteemed audience gathered here is eager to lend you their full attention. I would please welcome you to come forward to grace the podium. The stage is all yours, sir. A huge round of applause, ladies and gentlemen, for Advocate K.V. Vaitheeswaran, sir. Very good morning, sir.
Good morning still. Thank you. And I'm quite humbled because this is the third time you have invited me. So this is the 6th edition. So I've been happy, and it's a nice pleasure to be recognized every edition. So from the 4th, 5th and 6th I'm here. And I still remember when I came for the first time on the 4th, when I was about to get away, they said, "We were booking you for the 5th now itself."
So it's definitely an honor for us.
It is equally an honor and a privilege that I'm recognized. Thank you for that. It's a fantastic thing that you're doing, two organizations together to bring in so much of knowledge and disseminating information to the profession and the industry as such, and people spending so much of time, 2 full days in both direct and indirect taxes. So great work. My congrats to you on that, and all the office bearers as well as the conference team. Now moving on to recent controversies in GST. Recent controversies from 2017 onwards. Because from inception GST was a controversy. Whether it was the portal, whether it was the glitch, whether it was able to file, not able to file, whether it was, social media posts on restaurant GST, bills on the post, every aspect of GST has been a controversy, including the latest popcorn. Therefore, it was very difficult for me to pick up recent controversies. So I've tried to pick up key issues which profession and industry are dealing with and give some ideas, some perspectives, some thought process and where we are heading and where we might head. So straight away I'll go to block credits. And if you look at block credits, that's one topic which never ceases to arise interest, and it's always a debate. And the famous 17.5C and 17.5D. Let's look at the broad philosophy of block credit. The GST's genius is that everybody should be taxed, every level chain should be taxed, ITC must be fully available. That's the philosophy behind GST. That's it. It's a truly, supply chain tax and the consumption tax, where the entire chain is taxed up to the point of consumption and everybody gets the credit. So the idea of a block credit itself is wrong. And to justify it by saying that, no, we have our reasons. What is your reason? Immovable property has emerged. That's the reason. Fair enough. So when I rent out the immovable property, are you taxing me or not taxing me? So when I rent out that property which has been constructed, you have no problem in collecting the GST at 18%. But for the immovable property to emerge, if I have to incur expenditure, etc., you have a problem by saying that something as immovable property has emerged. So the philosophy behind 17.5C and 17.5D itself is wrong because they are missing the bigger picture. Those of you who are senior enough would have practiced in the excise days, central excise practice. In central excise, what will happen? You will buy one chemical, use the chemical, generate power, electricity. Electricity is not liable to excise duty. Then that electricity is used to run the plant and machinery. In that plant and machinery, one product is produced. On that product, you pay excise duty. Supreme Court said chain is not broken. Department argued the same thing. Power has emerged. Electricity has emerged. Electricity is an exempt island. Therefore, credit must not be given. Supreme Court said, no, look at the full picture. It doesn't stop there. It goes further. There's nothing different from what we are looking at in terms of 17.5C, 17.5D, that ultimately the property is let out or dealt with in some manner. But you have a provision which says so. Then we have the famous judgment of the Supreme Court in safari retreats. Today's problem in GST is publicity. Any good judgment comes, first it will come in WhatsApp. And it will be splashed in such a manner with attractive taglines, headlines, etc., that everybody becomes aware of the judgment, even people who don't even know what GST is. And then one professional will ask one question: will this stand the scrutiny of the Supreme Court? Then another professional will add a line saying that no, Supreme Court will reverse it. So then thought process is built. One will say Supreme Court will reverse, another will say Supreme Court will not reverse. And then somewhere the press will pick up an idea saying 36,000 crores are going to be lost to the government because of safari retreats. Where did they get these numbers? And therefore then Supreme Court, when they delivered a judgment, there was automatic happiness, jubilation, saying that finally Supreme Court, all of us know how that battle was fought in Supreme Court. It went on like for nearly a week. Some of you would have engaged and you've been part of that matter. It went on for a week. And last minute there was a hope through plant and machinery. Mr. Datta's argument came through at that point of time. Otherwise, if you look at it, everywhere it went against. So when Supreme Court decided the matter and the press reported that so much of revenue is at stake, immediate thought process, will we amend the law? Will we amend the law retrospectively or prospectively? We should stop thinking that we are a small country. Our Prime Minister has pushed us so much. We are now fourth largest economy in the world. And we are heading to become the third largest economy by 2030. A third largest economy will not do retrospective amendments to nullify their own Supreme Court judgments. No other country does retrospective tax amendments. Very rare they may do for constitution. We do retrospective amendments like anything. And as soon as the safari retreats came, the council met and said, yes, we are going to nullify the law. So what did they do? What did Supreme Court ultimately say? Supreme Court looked at 17.5c, 17.5d, found that there were two phrases, plant or machinery, plant and machinery. And they found that plant and machinery was defined, plant or machinery was not defined. And therefore they said, since plant or machinery was not defined, commercial principles will apply, commercial meaning will apply, general principles will apply, income tax judgments will apply, and therefore they applied functionality test. And said that if you can demonstrate that this apparatus, this equipment, or even building is your plant or machinery, take the credit. So that was the judgment of the Supreme Court based on various income tax judgments. There is another story, I don't know how far it is true. There is the Hindi version of the GST Act. I think it says plant or machinery. So does it mean that originally it is or and or is it or? Nobody knows. All this speculation keeps existing. So now that Supreme Court has decided, and Supreme Court had their logic and reasoning for this, because they said it is not a casual error. It was argued by the ASG saying that it is an omission. It could have, both is actually and, it not be or. No, Supreme Court said no, everywhere you have used the word carefully. Here you have used like this. And then they said Orissa High Court judgment came 7 years, 8 years back. You could have changed the law if you wanted that time itself. Why are you now saying this? But Supreme Court said functional test will be critical. So immediately, now we have the Finance Bill 2025, where the retrospective amendment is from 1/7/2017, whereby it is clarified that plant or machinery shall be construed as plant and machinery. Now this is a new set of jurisprudence that is coming now, because earlier all of us are used to practice or will be read as and will be read as or, depending upon where you are, which fact pattern you follow. But is the story closed? Is the script complete and finished with the retrospective amendment? I have my doubts. There is one interesting para in the judgment, para 32 of the judgment. Para 32 says, Clause D is different from Clause C. Clause D seeks to exclude from the purview of subsection 1 of 16 and 18 goods or services both received by a taxable person to construct immovable property on his own account. There are two exceptions. First exception is when it is received by a person to construct immovable property consisting of plant and machinery. Second exception is where it is received for the construction not on his own account. Construction is said to be on his own account when it is made for personal use and not for service. It is to be used by the person constructing a setting in which business is carried out. However, construction cannot be said to be on taxable person's own account if it is intended to be sold or given on lease or license. So then can we borrow from para 32 and say, look, we don't need any interpretation or and. In 17.5 itself, Supreme Court has explained what is own account. The language of own account still continues in the statute. Therefore, when I build to lease it out, when I build a mall to let it out, when I build a warehouse to let it out, when I build a huge facility, commercial facility to let it out, then my intention is not own use, but for the purpose of license or lease or a service, and hence para 32 of the judgment will hold good. Is one thought process. That is one. How far will it be valid? People will argue saying that no sir, that is not the ratio disunity of the judgment. You go to the ratio disunity of the judgment, it will only talk about plant or machinery or plant and machinery. But Supreme Court has done what is called as basic principles. They have looked at the section and said what the section says. They have not added anything further. Therefore, you can still apply para 32 and test it as far as this judgment is concerned. Second option would be to go further and then vivisect the entire section. Only if I am hit by the section, I need to be worried. So when do I get hit by the section? I am using the goods or services in construction of an immovable property. So what is construction of an immovable property? That becomes a larger question. Take this table that has been arranged beautifully, or even this platform. We are about 10 of us here. The platform should not move. Right? Therefore, it would have been probably knocked with some nails or somewhere fitted to the ground to ensure it has got some stability. Like that in various activities in business, in building, in constructions, etc., there will be a lot of equipments which may fix to the floor, fix to the wall, fix to the ceiling. in a plant, in a factory, in a location, there could be various other annexation to the ground. So there are two principles you apply. What is the object of annexation and what is the degree of annexation? Is the object of annexation to enjoy the equipment or machinery, then it is not immovable property. If the object of annexation is to enjoy the immovable property, then the position will change. So that is the test which people have applied, but you will always get notice saying that you have constructed plant and therefore will issue show cause notice. So let's look at few examples. Classic, throughout in Gujarat you see roof solar plants. Roof solar plant is just affixed on the roof of it, is not embedded to the. You can't say, sir, solar plant is on the terrace on the third floor is second floor is on first floor is on ground floor is on earth, therefore it is immovable property. You will get a show cause notice like that. I'm not saying it's not possible. Show cause notice is an art. How to write, in fact, some of professionals debate on how to reply to show cause notice. Sessions are all there. Do they have sessions on how to write a show cause notice? We don't know. Depends. What all, I want to tax this, what all I can say to tax this. 73 time bar is over. What to do? 74. As simple as that. Sir, you need fraud suppression. No, time is over for 73. What do? I issue 74. So ITC obviously on solar roof plants you can take, there is no issue. Then you take it and scale it up a bit further. Plant is attached to a platform with nuts and bolts to prevent vibration, provide stability in its working. It can easily be detached without causing damage. It is neither rooted or embedded on earth or rooted or embedded to any structure embedded to earth. Therefore, it is not immovable property. Even AAR himself gave this ruling. Very rare. If 1000 ARs are there, 999 will be fair of us department. Only one will come, like that one has come. Then let's make it a little more complicated. Central AC plant. If you look at central AC plant, it has got casings, it has got compressors, it has got equipment, it has got so many other things which are all working together to get an AC kind of an environment. Department says excise duty circular is there saying that AC plant is immovable property. But that was on a very different context. Today, you can dismantle an AC plant also and put it in another location. So then you go to lift. Government will immediately say lift is fitted to the ground, it is going deep into the ground, it is immovable property. Those days, Kone lift judgment is there. Then you have these malls, you have these escalators. They are forgetting the fact that first mall is built, then only the escalator is brought inside. Okay? Even lift also comes in dabbas, packet. It comes in boxes and then it is get installed there. So then you look at whether we can apply all these tests and still say I am eligible for credit. For that, there is another answer by the latest judgment of the Supreme Court in Bharti Airtel Limited. In Bharti Airtel Limited, the question was whether those towers which are fitted can be called as immovable property or not. Same excise problem, Senvat problem. Supreme Court said, how did the towers come there? It came in various parts, it came in various boxes, and then it got fixed there, it got installed there. Tomorrow when you want to relocate the tower, what will you do? You will remove it part by part, like the chess game which goes back to the box. You put back into the box and then take it to another location and fix it. Therefore, Supreme Court said it came in a dismantled condition and can go back in a dismantled condition. Why are you calling it immovable property? So, beautiful judgment of the Supreme Court where they said when mobile tower cannot be without dismantling it, it is to be noted that mobile tower itself was brought and bought in CKD, SKD condition and then erected, installed, and therefore it will not qualify as immovable property. After Bharti Airtel, which was an excise judgment, which was a Senvat judgment, same language, Delhi High Court, Bharati High Court in GST. Now the department said, sir, those and all outdated. Please see 17.5. End explanation. It shall not include pipelines outside the factory, towers. Therefore, our parliament has declared that towers are not eligible. Pipelines are not eligible. Delhi High Court said, if you declare, does it become immovable property? It has to be inherently immovable property. So specific exclusion of telecommunication towers from the scope of plant and machinery would not lead one to conclude that the statute contemplates or envisages telecommunication towers to be immovable property. They will still have to qualify as immovable property as a condition for 17(5)(d) to apply. Don't even go to explanation. Go to the top. Is it construction of immovable property? Then only I look at the explanation. If it is not even immovable property, don't go to the explanation. And therefore they said telecommunication will not get hit by 17(5)(d). You can still get credit. So if you apply the Delhi High Court judgment, read with the Supreme Court judgment, with an overall principle as to what constitutes construction of immovable property, then you have to draw a line on procurements. When you look at a big project, look at all pure civil items. Too risky to take it or dispute. Then look at all pure machinery, equipment, apparatus items. They are not hit by any section, take it. Then look at the nexus part. Some of these are fixed, some of these are fixed to the earth, etc. There you go through a technical analysis and see whether they can be dismantled and taken away. Then you come to a conclusion, it is not immovable property, therefore I can make a claim. So this is the exercise you may have to do even after safari, even after the amendment, even after the retrospective amendment. Second issue, block credit 2. I am not going to spend time on the other block credit. There are enough block credits there. Rent a cab is there. Club subscription is there. I am not going to spend time on that. This is something which is very relevant to Gujarat because huge manufacture takes place here. Section uses the words lost, stolen, destroyed, written off. Department has taken a simple stand that process loss is also loss. While manufacturing, something is lost. See, there is a nice South Indian dish called rasam. So, when you make the rasam, it's the tomatoes play a big role in that rasam. But the tomato should not be seen in a full and final condition after the rasam is made. Then it is not rasam. Okay? There will be some asafoetida or some other haldi which will be added. You won't see it in the rasam. It will all get consumed, merged. Something has to die for something to emerge. So department says, boss, you started with 1,000 raw materials, 1,000 inputs. I am seeing only 990 output. 10 is gone. Lost, reverse. Loss in the course of manufacture. There is process loss, evaporation loss, normal losses, stagnation losses. Items will not move through the pipeline. It will get stuck somewhere. All that is all not contemplated by lost. Lost means a calamity that has hit you and that is destroyed or that is completely gone out of your control, not your normal activity. Then the department now says, you are a pharma manufacturer. You have manufactured medicines. Medicines have been sold to distributors. Distributors sell to dealers, dealers sold to chemists. Now, after some point of time, expiry life happens. Therefore, you give direction saying chemist has to destroy or send it to dealer, dealer has to destroy, or dealer to distributor, somebody has to destroy. It has to be destroyed. Your pharma products have been destroyed. Reverse credit. Array, please look at the section. Input has not been destroyed, output has been destroyed. And that too when my story is over. What is my input tax story? I bought an input used for business. Over. Product emerged, supplied, chain over. Subsequently it got destroyed or has to be destroyed as per law, should not affect my reversal. So then the revenue came with an idea saying that you identify how much of inputs are sitting in that particular pharma product and reverse the ITC on that. Okay, please show me a provision for that. There is no provision. There was a provision in SENVAT credit rules. They have not carried it in this section. Therefore, it is not possible till they amend the law. Written off. Many of your accountants. Written off means written off, not partial write-off. Not provision for writing off. It must be an actual write-off for you to reverse credit. Because in many cases, they'll keep 1 rupee value to keep the asset in the books. or they'll make a provision for a write-off. They may not do an actual write-off, depending on the business and the nature of circumstances, etc. Madras High Court explained 17.5H and said, loss means like a tsunami or some kind of a cyclone or a typhoon. Something destroys the inputs while in stock. Then you reverse it, otherwise it's not required. It will not apply to business loss, process loss, manufacturing loss, etc. Very clear, 2 judgments have come. Third issue, the famous ITC. All action against recipients. As if supplier is a great guy. Did you buy from him? Yes. Did you take credit? Yes. Show cause. He has not paid the tax. Arey, main kya karu? You have the entire government machinery with you. You have superintendent, assistant commissioner, deputy commissioner, commissioner, chief commissioners, board, finance minister, everybody is there. Why did you go and take action against an errant supplier? You are a bigger guy, it's easy for me to issue show cause to you. So all action against ITC. So tax administration perspective is this. They saw fake invoice racket. And they changed the law like anything to tackle the fake invoice. They forgot one basic principle. Whoever generates fake invoices will file GSTR 3B and GSTR 1 promptly before the due dates. He will never default those returns. So all these amendments to say it must be seen in 2A, I will match it, all those things, fake invoice fellow will say tick box. All that is met. There will be some other genuine fellow might have missed it. So this fake invoice racket went across the board. Again, press reports. Again, whoever gave them those numbers, nobody knows. So based on that, now department's answer is this. Whether it's GST central or GST state, no difference. Question all ITC. Why break our head? Like in our income tax, those days when we used to write our exams, there was this famous question will come. Whether TDS should be done or not. When in doubt, deduct. Why take a risk? He will anyway get a credit. So that philosophy, department says, if he takes ITC, issue notice. We'll see later. So question all ITC, suspect all ITC, recipient responsible for everything. All action against recipient. Why are you having so much of ITC? Show cause. My output supply is not significant. I've just started business. I've invested heavily. I've accumulated ITC. Something is fishy if you have so much of ITC. If ITC is used to pay tax, that is not tax for the eyes of the department. Only through cash ledger, if you pay, it is tax. Credit ledger payment is not tax. And then passing on a benefit to ITC means the entire ITC should be passed on. And the latest exercise is compare and demand. Your 3B and 2A does not match. Show cause. You have too much of money in 3B compared to 2A. Show cause. You have too less money in 3B compared to 2A. Show cause. Your 3B and 1 doesn't match. Show cause. Your GSTR 1 and e-way bill doesn't match. Show cause. All exhausted. What to do? Your 26AS and GSTR 3B doesn't match. Show cause. Everything is compare and demand. And they give you some 3 days time, 5 days time to reconcile everything and give the data and then pass an order saying that data was not given, reconciliation time was not given, etc. And you rush to court. Court says, why can't you give the data? Last 5 years financial data when a company has gone from a normal software to another software. Impossible to get the data. But luckily courts in ITC are getting in favor. They are now saying, don't just jump on the recipient. Have you taken action against the supplier? Because very interesting question. They come to you and you reverse the credit. Later on, if they go to the supplier and collect that tax, what happens to your ITC? No answer so far. But it is possible that they will collect ultimately. Because see, in the hierarchy, the bigger players will get the notices first. Then the middle players, then the smaller players. Like that they will get those notices at some point of time. Nobody escapes the eye of law. The arm of law. Therefore, they will get in at some point of time. But then if they collect it from them, what happens to mine? Or he closes into the Samadhan scheme, settlement scheme, and he pays the tax. What happens to my ITC? So Calcutta High Court, Division Bench, very clear saying that action against supplier essential. Kerala High Court, non-reflection of ITC in 2 years should not be an automatic ground for denial. Taxpayers should have the opportunity to prove the genuineness of their claims, ensuring a fair application of tax law. So these are some of the issues which I talked about, ITC. I'll now move on to valuation. Famous issue, corporate guarantee. I'm running a holding company. I'm the holding company. My friend here is a subsidiary company. I'm 100% shareholder in that company. They've gone and taken a bank loan. Bank says, your track record is not great, you're just starting your operations. If I give you a loan, I need some security. Your parent is big, he's a big shot, holding company is doing well, they've got a very good track record. You ask him to give a corporate guarantee. So I give a corporate guarantee to the bank, saying that if something goes wrong with my subsidiary in terms of repayment, I will step in. So department now says, you have provided a corporate guarantee to a related party. First of all, I have not provided a corporate guarantee to my subsidiary, I provided to the bank. The recipient of service is that person, not him. Then they said, we don't care about all those things, we'll amend Rule 28.2 from 26/10/23, and then said that wherever corporate guarantee is given to any banking company or financial institution on behalf of the recipient, its value shall be deemed to be 1% of the guarantee offered or actual consideration, whichever is higher. Then they amended rule once again and then said that, 24, notwithstanding anything against sub rule 1, where the value of a person located in India shall be 1% per annum. So the question came as to whether it is annum or the entire period of lease, etc. Now let's look at the third element in this piece, which is the circular, where they gave a circular saying that we have amended 28.2 from 26/10/23. It doesn't mean that it was not taxable before. Therefore, they said that from 26/10/23, look at 28.2. Prior to 26/10/23, look at 28.1 and do a valuation for related party transaction. So, for the same corporate guarantee between related parties, they are saying prior to a cutoff date, apply general principles of 28.1. Post cutoff date, apply this 1% theory or actual consideration. The answer can be very different. You can, depending on where you stand. For corporate guarantees that are executed given prior to the cutoff date, supply is over. Without a continuous supply, I have given the supply. I have signed the corporate guarantee. When I signed the corporate guarantee, there was no mechanism for valuation. Now from 23, you are saying that take 1%, then take the actual price, confine it to India, look at it per annum, out of the two, whichever is higher, we'll take. All these are conditional items which have walked into the statute only from a cutoff date. Therefore, you cannot apply any of this for the past period. None of the rules existed before, therefore, value collapses, computation mechanism collapses, Srinivasa Setti would apply. Then the revenue would say, no, there is a circular which says 28.1 shall apply. If 28.1 has to apply, it must be a service between me. When I am a holding company and I am giving a corporate guarantee, I am protecting my investment in my subsidiary, therefore, it is a shareholding activity. There are income tax case laws before amendment. Transfer pricing got amended only later. But before transfer pricing amendment, you have micro-link and so many other judgments in income tax which said corporate guarantee issue is nothing but a shareholder activity. Bring all those case laws to GST and say this is a shareholder activity, there is no service involved, and therefore there is no question of GST prior to the amendment. Additionally, if the department still insists, you can always say, I can rely upon the famous board circular which says, if related party transactions are involved and billing has not been done, nil value shall be adopted. Take nil value, which means no GST on corporate guarantee prior to the cutoff date. Post cutoff date, matters are pending in courts. 28.2 has been challenged, circular has been challenged. Courts will have to decide whether government has the power to tax it in this format. But we'll have to see whether they lay down guidelines or they say everything is valid, or we again go to Supreme Court for a decision at some point of time. Moving on to the next element in valuation, discounts. GST is on price paid or payable. That means it is after all discounts. But there are so many discounts which I will never know at the time of supply. Volume discount, achievement discount, target discount, incentive based discount, discount for the sake of discount, discount because he is not paying. Professionals know this. 1 lakh is outstanding. 1 lakh is outstanding for a long time. You send 5 emails, no response. Then finally pick up the call and say, yes, no, 1 bill is outstanding. 1 bill is outstanding for a long time. It's very heavy. Can you reduce it? He wants discount and you are in a position, March closing, cash transactions, cash flow, take one discount, close it, collect the money and go. This is our approach. Gujarat, I don't know what technology you use. Same approach. So this is the discount for the sake of discount that happens in business. So finally some discount is given, and how it is given in business through credit notes. So credit notes are given. Credit notes, funnily, credit note is, which is nothing but an accounting instrument, an adjustment in accounts, finds place in law by saying that you raise credit note, it must have so much of information, it must be within the time under so and so law, section 34, you must upload the credit note into the portal, match it with the invoices, etc. So something which is pure accounts has got into the act, and that creates the problem. Why? Because all post-supply discounts need an agreement. Most big manufacturers knew about this and signed up agreements from dealers from day one. They'll say that if you achieve a target or volume, etc., we'll give you a discount. And dealer says, I hereby agree that I will reverse the credit attributable to the GST benefit that I get. So basically, I raise invoice for 1 lakh, I pay GST, 18%. Then I raise a credit note, it comes down to 80,000 rupees. Therefore, that's an excess payment of tax. By uploading the credit note, I can use that excess tax to pay my other tax liability in GST. With a caveat that buyer should reverse that GST portion which he has taken on 20 rupees. This was the requirement. 15(3)(b) was structured like that. Then the associate department said, has your dealer reversed the ITC? How do I know? He has said he has reversed. Have you checked? How will I check? Then assessee said, you are GST department, no? You check. You have the portal with you, you have every connection with you, why don't you check? No, we can't go and ask another superintendent or another jurisdictional officer whether his recipient has reversed the ITC. That is not our job, you do it. So assessing officer says, no, I will not allow, passes an order. You go and appeal. Appellate authority says, this can be verified. Then said, please do verify. I am appellate authority, I won't verify and all. Then old appellate authority, I will remand. Madam, you can't remand. New section does not allow you to remand. You have to take a decision. So it becomes quite complex there. And therefore, board gave a circular saying that, sorry, we don't have a mechanism, we didn't have a functionality, therefore, get a chartered account certificate. They made it easy for them. Just like that, ITC reversal in the context of 2A, 3B. They issued another massive circular, CA, CMA certificate. Please include the details of credit notes. Such CA shall be contain the unique ID of the service by the CA so that it can be verified from ICA website. And because fake certificates should not, just like fake invoices, you don't want fake certificates also. So this mechanism has been introduced. But the most interesting development, I would say, is the amendment to Finance Bill 2025, by Finance Act 2025, where section 34 is now substituted. All credit notes now require reversal by recipient. Earlier, only for post-supply discounts governed by agreement, there was a requirement for reversal of credit, GST. Now, any credit note that you issue, you must ensure that the buyer or recipient has reversed the ITC. That is the effect of the amendment to section 34 from the date to be notified. Of course, it will be challenged. How do I prove it? Unless they create a functionality, etc. Those of you in active practice in GST would have heard this phrase, assess various basis. In accounts, we use this. I do a slump sale. I take one division and I sell it on a slum sale basis. I do a BTA agreement, business transfer agreement. Business is sold on as whereas basis. Or a product is sold, they say this is as whereas merchandise. That is as it stands. Somebody has given this input to the board. They picked it up. Oh, this is nice, very interesting phrase, we'll use it. So what they do, they will issue circulars. And typically what happens, this is just an example. Let's say this is, you can't call it mineral water now. This is packaged drinking water. That's what probably it will say. Yeah, packaged drinking water. I don't know whether you have noticed in all the snacks that you eat, it will be a multinational brand, famous brand, all those things, etc. Somewhere in that cover it will say namkeen. Because the entry is only namkeen. He doesn't want a GST officer questioning the product and say it is some other preparation at file falling under some other higher rate. Therefore, he puts it, no worries, I'll put what is required for the statute. So, packaged drinking water, let us assume there was a dispute. There's no dispute, let us assume there's a dispute on rate of tax. Somebody has paid 12. Somebody thinks it is 18 and paid 18. There is chaos, confusion. So, board comes and says, as is where is. That means what? Who all have paid 12, it's okay. Who all have paid 18, it is okay. From this date, that is the date of the circular date they specify, it is 12. And then they add a line, whoever has paid 18 cannot claim refund. This is as is where is. So as is where is, whoever has paid extra, thank you. Whoever has paid exact amount, fine. Like that, they will close what is called as is where is, and that's a new format. And look at the last para, that's a beautiful example, where taxpayers have paid 5% on supply of X, while some have not paid duty due to the genuine doubt that there was an exemption entry for X. And the council has clarified that the actual rate is 5% from 1/12/23, and regularization of the past is done. Then for the period prior to 1/12/23, non-payment of GST and declaring such transactions exempted supply in the return will be treated as full discharge of tax liability, and they would not be required to pay the differential of 5%. For taxpayers who have paid 5%, no refund will be made. There is no power available in the statute to give such circulars. If at all you should do, you should issue a notification under section 11A, which is similar to section 11C of Central Excise Act. Mere circular cannot provide for waiver or immunity and cannot state that what has already been paid will not be refunded. It will be testing under, we had an earlier speaker on constitutional rights. Ideally under Article 14, 19 and 265 you can challenge this. You can twist it. Then you ask me a question, sir, this regularization is beneficial to me. Then keep quiet here, enjoy. Why are you even coming and discussing this matter with me? No, in case the department takes a different view, let them take, then we'll see. The assessees are also crazy. They say, sir, he might issue a notice, so you want to preempt it and go on a high court writ. High court writ is not like shopping. Clients come and say, sir, 1,000 crore demand he has passed. We have to immediately file a writ. I said, why? We don't have 10% to pay. That is not an excuse for high court. So you have to scan through the order to find out a jurisdictional defect or a natural justice violation or a complete legal violation to stand before the court and say, I would like to file writ against an order without getting thrown out for appellate remedy. So it is not a choice based on the quantum. It is a decision. It can be even 100 rupees, but if it is a jurisdictional defect, it can go to court. But as senior counsel rightly pointed out, you go only where it is, when it matters. You can't go in all matters. If beneficial circular is there and department does not follow it, we have enough judgments which says you must follow the circular. If the circular is against, you can always take a stand. Circular is not binding on the assessee, and for that also there are case laws to say that you can counter it. Next I move on to educational institutions. So educational institutions are much more complex than businessmen. If somebody says your fees is very high, no, fees is only this much, rest will collect in different names. So they'll collect under different categories, different heads, moral allowance, health allowance, bringing up discipline, something, some names and all, vague names, categorization, they'll collect all those things. School has a huge auditorium, let out to third parties for conducting seminars. Probably IMA would have done this here. Then school also does NEET coaching and IIT coaching, IIT entrance coaching. Then some of the schools are affiliated to Cambridge. Therefore, they make payment to Cambridge, UK. Then that fellow does one drama for conducting the exam. Therefore, he collects a fees for all the drama. All education institutions assume that we are education institution. Whatever you receive is exempt. Whatever you pay to foreign party, no tax. Why no tax? This reverse charge mechanism and all is not applicable to schools and colleges. Standard answer. So you find that all the audits will reveal some defect here and there. So let's look at it with a deeper perspective. You have to simply understand this. All I have to demonstrate is that I am an educational institution, as per definition. Once I am an educational institution, any service provided to a student, faculty, staff is exempted. Nowhere does the entry says only school-related service is exempt, college-related service is exempt, education service is exempt. If you are an education institution, you just have to meet the condition of being an educational institution. You have to provide your service to faculty or student or staff. It is completely exempt from GST. Entry 66 will take care. Of course, meeting the definition, preschool, curriculum and college, those things, and of course approved education, we have various conditions. Lot of companies, lot of schools think, sir, I am a 12A registered trust. I am a 12A charitable trust. Therefore, I am exempt. The definition of education, which forms part of charitable purpose definition under Income Tax Act, is not the same as charitable activities in the exemption. The exemption in GST is much more narrow. So therefore, you may not get the benefit because the scope is very limited in the charitable activities. So see if you are an education institution and see whether a service are provided to students, faculty and staff, then that would become by itself exempt. Now I collect money for books, for ruler, pen, bag, badge, cap. I collect so many other things. Whether it is all exempt from GST. Apply composite supply. If principal supply is exempt, incidental supply is also exempt. Department's view, no, these are all separate supplies. You pay separately tax on the bag. You pay separately tax on the other items which you are charging. No, they are all incidental. Some schools have found out a new technique. School will provide education. School will collect the fees. They'll have a group company which has a GST registration that will buy the bag, take the ITC, sell the bag. Only thing is parent gets two bills. One from the institution, one from the company. If parent doesn't object, simpler solution because you get the ITC also. Otherwise here you lose the ITC. So depending on how you have structured. It is not as if only our GST authorities are bad or our SEs are bad. World over the same. So in College of Estate Management versus Customs and Excise, college was exempted as it was providing education and was also sending printed materials to students. College contended that printed materials are taxable and therefore they want ITC. Department said, no, it is exempted, you can't take ITC. House of Lords said that college provides education and supply of materials cannot be split. It is part of the same service and therefore it should be treated as exempted, no ITC. But you get a principle for us, composite supply, to say that these are not taxable. So composite supply is very much applicable. And of course, Mohit Minerals is also there for composite supply as far as GST is concerned. And you also have the Gujarat High Court in Torrent Power. Somebody was mentioning, I was in Telangana last week. And there was a topic on various discussions, etc. And somebody was saying that all favorable judgments come from Gujarat High Court in GST. I said, good, enjoy it. How come new judgments are coming from Gujarat High Court? They think differently, they get judgments differently. Somebody is able to think differently, take it forward, contest it, assessee is willing to test it, court is willing to hear it, court is giving a judgment, judgment helps the entire country, why not? I am happy. Please do the good job again. Whatever precedents you set is good for us too. I always believe, in fact, this is a fantastic thing. No, you all Gujarat Federation of Tax, which comprises direct tax and indirect tax and all practicing professionals, and IT bar, which is an exclusive bar, coming together to discuss 2 days of direct tax, indirect tax. It actually is nothing but a curtain raiser to the concept that a GST dispute can use an income tax precedent, an income tax dispute can use a GST precedent. For example, I am a commission agent, or I am an exporter of services. I have to receive $100. I have to pay $5. So I do a net off. You have not received $100, you have received only 95. Show cause notice. I can go to JB Boda and argue. I can go to JB Boda Supreme Court and says two-way traffic is a waste of time. So there are enough principles in direct tax you can apply to GST. There are enough principles in GST you can apply to income tax. Like that, even though New Noble Education Society in the context of 1023 was a very contextual judgment, there is a nice paragraph by the Supreme Court saying, what is incidental business activity education? They said textbooks, running own buses to transport children, summer camps for special educational courses, hostel only to students and not outsiders. These are all business relatable to educational institution. So it is good, we can use that. So insofar as shoes, books, belt, bag, stationery, notebook, geometry box, lunch box, school uniform, etc. are concerned, though a separate fee is collected, you can call it as composite supply and therefore it is not taxable. Next you come to NEET or IIT coaching. Schools are smart. When the boy joins that stream of education at some level, they tell the parent, now itself you have to start. Medicine and all, they started very early. Scary. Compared to how we wrote law exam and how we wrote CA and CWA exams. Very different. These people prepare, of course, CAC paper, they prepare, they take that time seriously and really throw their energies into it. But people start at a very young age. So this coaching starts at a very young age. So this parent knows that this student has got taken this path. Therefore, the syllabus itself is structured to have IIT classes, NEET classes. So the batch will split. 50 students are there, 30 will go to one section where this coaching is there, 20 will go to some other section where something else will be there. They won't get free time. No student gets free time unless teacher is absent. Even then there will be some other teacher who will substitute and say, I will teach today. I've never understood this as a school going boy in those days. Why should there be a substitution? Let us enjoy that 45 minutes now. Especially the toughest teacher in the entire class will come as a substitute. Fee bundled with regular tuition fee is one format. Fee collected separately on optional basis is another format. Coaching during class hours is one format. Coaching during after class hours is another format. Coaching to even third parties is the last format. Last format is dangerous. Coaching to third parties, GST is applicable. To students, whether you provide as part of curriculum, whether you provide during class hours or after class hours or on Sundays, does not matter because he is a student, you are an education institution. Any service is exempt. That's my first point. So once you are an education institution, any service is exempted. It does not mean that it must be within that clocking hours or ringing bell hours. And again, Gujarat High Court, education initiatives, you cannot have a restrictive meaning. Then Karnataka High Court, they said even the administrative body will also have to qualify for exemptions. Now we have disputes with regard to Cambridge, admission fees, exam fees, etc. There is a Madras High Court judgment from Madurai Kamaraj University which said that how can an education institution run unless there is a body which prescribes the curriculum, which prescribes the pattern, which conducts examination. Therefore, they are also part and parcel of the education institution. Give them the benefit also. That is what we call as the affiliation fee. Next topic, move on to arrest. I think Tushar would have covered to some extent. The famous judgment, did he cover Radhika Agarwal today in the morning? He hasn't touched, okay. The latest judgment has come, Radhika Agarwal judgment of the Supreme Court. This is the law now. Thanks to Kejriwal, we have one judgment in GST also. Some benefit he prevailed. So this was a dispute before Supreme Court saying that officers should not have power to arrest. GST is a commercial law, economic law. You cannot have these kind of powers given to the authorities. Similarly, customs was also part of the legislation. Supreme Court laid down principles saying that customs officers are not police officers, mandatory to maintain diary of proceedings, and now most important, ground of arrest must be provided to the person being arrested. This was not followed before. This flows from Article 22, Kejriwal's case, where it says that arrest must be communicated to allow the party to challenge the legality of the arrest. So in GST, what follows? Preconditions set out in Arvind Kejriwal has been reiterated, which means officer must have the material in his possession. Reason to believe must be recorded in writing before arrest and arrest under customs and GST. It cannot be made on mere suspicion. Person arrested must be informed of the grounds of arrest immediately. Decision to arrest must be based on admissible evidence and not arbitrary discretion, which means trail. You can't arrest somebody saying that I want to arrest to collect the tax. That theory is gone. You have to have possession material information before you proceed further. So then, of course, what happens is it's a subsequent right. You go to courts and knock the door saying that Radhika Agarwal not followed. The assessees who went before the court did a great job. They collated data where they demonstrated how much of crores and crores of GST was paid on the threat of arrest. See, typically we know what happens. Somebody is summoned and then says, you have done this, there's a 7 crore violation, 8 crore violation. Unless you bring down the figure by paying immediately, you will be arrested. So in most cases, GST will be paid that night, midnight, something. Who will pay GST midnight? That to this much of money. Therefore, something else is there to motivate that payment. So Supreme Court said, analyzing the various data indicates that number of people arrested is normally in hundreds or more. However, it is noted that the figures regard to tax demand and tax collected in fact indicate some force in the petitioner's argument that assessees are compelled to pay a tax as a condition for not being arrested. Subsection 5 of 74 gives an option to assessee and does not confer any right on the tax authorities to make or compel somebody to pay the tax by threatening arrest. This would be unacceptable and violative of the rule of law. What should have followed is, they should have said, please give back the refund what you have collected. But Supreme Court didn't do all that. They said, from now on, don't do all these things. So Supreme Court said, we would observe that in case there is a breach of law, assessees are put under threat, force or coercion. Assessees would be entitled to move the courts and seek a refund of tax deposited by them. Department will also take appropriate action against the officers in such cases. So it's now a future remedy, but at least some guidelines are there. Probably board will also come out with guidelines based on the Radhika Agarwal judgment case. Then as far as summons is concerned, assessees tried to argue that you can't summon me. Supreme Court said no, anybody can be summoned. You can't stop investigation. So investigation must be allowed to proceed in accordance with law. Then there were conflicting judgments on anticipatory bail in GST. Supreme Court has nullified all those judgments by saying that some decisions such as Chudamani Parmeshwaran Iyer case and Bharat Bhushan versus DGST case, Nagpur, are incorrect and they contrary to the above principles of what has been laid out. Therefore, power to grant anticipatory bail also exists even in respect of GST matters once you apprehend that there is a threat of arrest. But unfortunately, while this all is good, the fundamental philosophy is that, have you quantified the tax? Have you identified why the tax is payable? Have you given them an opportunity to contest why it is not payable? Have you given a fair hearing and passed an order and then the demand has crystallized? And then you trigger the arrest proceedings. You can't proceed on arrest at a summon stage when the matters are yet to be quantified. At least direct tax has maintained the sanctity. They would prosecute only in cases where it has gone beyond certain levels. They would not automatically prosecute. But somehow, customs color has been given to GST, and in GST offences, they treat them as two parallel tracks. Arrest is separate, show cause is separate. Then we come to leasehold rights, and back to Gujarat High Court. Gujarat Chamber of Commerce and Industry versus Union of India, latest judgment of the Gujarat High Court, 94 GSL 113. Very nice judgment. Something which I have been talking about for a long time, saying, third schedule says land. So many professionals argue with me saying that, sir, only land is excluded, immovable property is not excluded. I am saying immovable property not being subject to GST is not because of third schedule, but because of the fact that GST is only on goods and services. If GST is on goods and services, it is not on immovable property. It is out of syllabus. You don't need a third schedule for that. Dividend, nobody pays GST, but it is not there in third schedule. Partnership firms, partner receives salary. There is no employer-employer relationship, but nobody pays GST on salary as a partner. You don't look at third schedule. There you apply basic principles. You apply, there is no supply, there is no consideration, there is no service. Same analogy, if it is immovable property, it is neither goods nor services. Immovable property is wider than land. Benefits attached to land, benefits arising out of land, they will also be immovable property. So that was the principle which Gujarat Chamber of Commerce focused and said that it will not tax leasehold rights. And they made an interesting distinction. When GIDC gives the land on lease to the first lessee, that is a service. GST is applicable. When that lessee assigns that leasehold right in favor of another person, that is not a service, that is an assignment of rights in immovable property. Therefore, it is out of the ambit of GST. They said it's a completely different transaction. The first transaction, they said we have no qualms in understanding that it could be a service. But the second transaction, which is assignment of rights, they said it is not taxable. So that's the impact of the judgment where the Supreme Court, where the Gujarat High Court has said that it will not be liable to GST. Bombay High Court applied the Gujarat High Court judgment in the case of Panacea Biotech and then remanded the matter back to the lower courts to decide whether this is, you going to apply this judgment or not. Income tax has already seen this. Kenneth Solomon, in terms of 105, the Transfer Property Act, agreement of lease confers on the lessee to possess the immovable property, the subject matter of lease. It's being an interest in immovable property, it will be covered under immovable property. Leasehold rights as immovable property has been recognized in Kenneth Solomon, Gasper, and so many other judgments which have come in the income tax law. Next, the logic. If leasehold rights are immovable property, why not development rights? Development rights also should be perceived as immovable property. In fact, that is the position which also is known in the judgment. Also, there is a para which talks about it. Immovable property, Anand Behra, so many other judgments which says that it is all immovable property. But I would add one more dimension, which is the latest 9-member judgment of the Supreme Court in the case of MADA. Youngsters, best example to read a good judgment and understand constitutional principles of taxation and how it flows is this MADA. Why I said youngsters? Because it is one part fully. Entire part of SEC is covered by this judgment. Seniors would have already read it because it is an ingrained habit. Any case law that comes, read, is the habit of seniors. Youngsters, that time if Google throws up, they'll use that case law. Otherwise, they may not read that case law. So I'm saying it is an interesting, you have to patiently read because patience is a lost virtue today. Maybe, you mentioned 33 years of practice, it's actually 35. So no worries, I still feel young, so it doesn't matter. But this, when I cross so much of practice, I realize that, the youngsters which I see today, they don't have the patience to read or watch even a video which is more than 2 minutes. I've seen youngsters watching news channels where they speed up the speaking, 2x, 3x, etc. I said, what are you doing? I don't have time. What are you doing otherwise? You're not busy at all otherwise. But you want to create time for what? Shorts. So it has to be crisp, quick. It has to capture their attention, otherwise lost. And judgments are not like that. Judgments are quite complex issues. You have to go through it. And some judgments will drag on till you come to the key part. But this is a judgment which will really test you on union list, state list, various other parliament entries, state entries. Therefore, it's a worthwhile read. I've just captured few points out of it. Land would mean all kinds of lands, irrespective of use to which land is put on. State legislatures have legal competence under Article 246, read with entry 49 to tax lands. Now, I will use this judgment to expand the scope of immovable property to encompass even development rights. Then, I will also use the judgments to say that I am not liable to pay GST on royalty on mining. The entire dispute in this case was mining royalty. And what has Supreme Court said? Parliament has no role Parliament has no power. Entire subject falls within the state entry of land, which means you can't apply Article 246A to it. Unless another 9-member bench says, no, applies this aspect theory for GST also and says 246 aspect is different, state entry aspect is different, which will take another 20-25 years, and they may not say that. Because now all states have now reenacted their royalty related tax laws. Cess has been imposed by almost all states wherever mines are involved, exercising powers under this judgment. Therefore, you can still argue that royalty can be questioned, development rights can be questioned based on the Gujarat High Court as well as the Supreme Court. One popular dispute across the country, JDA signed before 1/7/2017. You signed the JDA in 2015, 2016, 2009. Nothing happened. Disputes between parties. There were occupants in the land. They had to be evicted. Brothers fight. HUF fights. All that had to be resolved. Then one court case is there. That stay has to be vacated. By the time the promoter starts the active construction, it is 2019, 2023. Now it is handing over time 2025. The moment CC comes and you hand over, department says, please pay GST. Simple answer. My JDA was signed prior to 1/7/17. Why are you taxing me? You are saying that, sir, under JDA, you are getting development rights in lieu of which you are given construction. Development rights came to me in prior to 2017. It came to me in service tax regime. It came to me when service tax was applicable. Please put service tax if you can. Service tax is over. Time is over. 73, 74, everything is over. Therefore, there is no question of service tax on this transaction. Plus, you can always rely upon 142(11), which says that once something is a taxable activity in service tax law and tax is paid or whatever it is, it cannot be tested in GST. So, pre-GST agreements, you can definitely take a stand. There are other judgments which also support this to argue. Then you move to JDA, agreement with the landowner share. Various models exist. One popular model is revenue share. Both of us sign agreements. I will sell. Whatever I construct, I will sell. 100 units, I will sell completely. As and when money comes from the customer, I will pay 5% GST. After that, a percentage, 40%, 42% will be transferred to your bank account. Pure revenue share. Where is the construction provided by the promoter to the landowner in this transaction? You can tax it under 6/2019, provided development rights moves against which construction comes. So when development rights are going through an agreement where there is no construction to match it, you cannot apply 6/19, you cannot apply any of those notifications, and therefore you can take a stand that revenue share, there is no question of GST, and there are judgments in other contexts. You have port trust, then we have the famous IPL cases. All IPL cases on revenue share. You have various teams, CSK, you have Gujarat, you have RCB. RCB brings a smile. Each time they aspire to take the cup, let's see what happens. They are the first fellow to aspire to take the cup. Other players never bother, they just go and then qualify and sometimes take the cup or they go up to the finals. So all these teams are there and BCCI is there. So BCCI negotiates with the advertiser, with the big sponsors, major brand sponsors, and monies come. That money is shared between BCCI and all the IPL teams. Then the IPL teams themselves can generate money from the stadium, local sponsor, t-shirt sponsor, like that there are various lists, etc. Selling of things, so that money they keep, and this they call it as share. Department said that also attracts service tax. We fought the case saying that that is revenue share. That is overall, that is suffered tax, I am only getting a share of that, therefore there is no question of tax. Once you move out of revenue share model, some people like revenue share model, some people don't like, because landowners say, I don't trust the developer, I prefer units. Or landowner has got a big family, 11 people are shareholders or shares, they are getting 12 units. The whole plan is and distributing the units to entire family member. Therefore, I want area share. So area share agreement. So questions will come, is there a service, etc., etc. So I'll give you 4 answers. 1, aggressive position, hyper aggressive position, no tax is payable. Why do you say no tax is payable? When I am a developer and I have to give 40 units to a landowner, I'm incurring heavy costs in building those 40 units. Where am I recovering from? I'm recovering that entire 40 flats cost in the selling price of the 60 to the customers. On that 60 which I sell to the customer, I paid GST. Therefore, the cost of construction involved in generating the units for the owner is already captured in my accounting and selling price of the units to the buyers. I have already paid GST. I need not pay GST again. No tax position. But you have to test it. Probably Gujarat is the best place to test it. Second, I'll go by the notification. Rate charge for similar apartment nearest to the date, which will be the highest rate. See, here it all depends on how you have drafted the JDA. Here again, interesting. See, we are lawyers, chartered accountants, cost accountants, etc. We talk about tax. The builder comes to us after all the agreements are signed. You go through the agreement, it will say, whatever tax is applicable, that person shall pay. You will never understand what that clause is. In some agreements, say, VAT as applicable will be collected from the landowner. They've gone to some top-notch civil lawyer, etc. He is good in his subject, but he may not be taxed. I'll be horrible in civil law. So, we advise saying that let him finish all the commercial drafting, test it from a tax angle. Tax clauses, please test it from a tax advisor. Because you may not be able to collect the GST from the landowner if there is no clause. He will simply say, where is the clause for collection of GST? Promoter says, I will collect. You can't collect if commercially it doesn't provide. Or it may have a clause saying that all taxes shall be the account of the promoter. That time he wants the landowner to sign. He has agreed to everything. And now you want to collect GST running into crores. It's so difficult. So it's very important that you draft it. So you take a position that today itself you are aware what will be the GST on the landowner share. Transparently tell him that this is going to be a liability. Put it in the document saying that as per so-and-so notification, GST will be charged based on amendments also. Because who knows what will happen later on. They'll amend the law further. But if this doesn't work, if there is no clause, or there is a clause where both parties are fighting, I had an interesting situation where a developer came to me for an advice on how to structure this, how to deal with the valuation because landowner is not agreeing. So I said, okay, let's look at one more option. We can look at your cost plus 10%. What is the cost involved in constructing this apartment for the owner? Because he owns the land already. There's no necessity for loading the marketing cost and sale promotion cost. There are some paras in that Manubai judgment which you can use. Munjal judgment which you can use. So you can take a stand at cost plus 10%. So I said that is possible. Developer did not agree. He said, I want first price. Landowner said, no, I don't agree. First developer came and took an opinion. Then landowner came and sought this opinion. Boss, the developer is already my client. I can't give you advice on this. It will be a conflict. No, I'm aware that you gave the opinion. I want to understand this and I'll take a fresh opinion. I've told the developer also I'm coming to your office. And okay. So I gave the same opinion. Then both of them called, said that we want to come to your office and try to sort this out. Panchayat. They came to office, spent 3 hours, still fought with each other, went back. They couldn't come to a resolution. I had completely forgotten about it. 1 year later, I get a call from a retired judge. He calls me and said, Vaitheeswaran, this GST on landowner share, what is this drama? I said, who's the party before you? Same names. Sir, they tried solving it in my office. They are not able to do it. They've gone to arbitration. You are the arbitrator. You have to solve it. I can't solve it. It's very tough because money is involved. On one side, promoter says, I will not hand over the key. On the other side, landowner says, I need to sell a unit to pay the GST to you. So it's very difficult. I don't know why they're even taxing it. They can make it a zero rated. They don't get much out of this. Selling rate for a customer is based on, is used as a calculation. So we're looking at challenging it. What happens if the selling rate is not even available? I'm not even selling. Can you then borrow it? Then the notification fails. So you can look at those kind of angles to take a view. There is one judgment, Telangana High Court, which says that development rates are taxable. The reason why they say it was taxable is that they said a developer cannot sell till CC is obtained, which is incorrect. Factually incorrect. Developer starts booking even before CC. As soon as JDA is inked and his basic plan is cleared, he will start selling. Promotion starts and he'll get money. Otherwise, how can he construct? So different perspective to Telangana High Court. This may require review. What are the grounds on which you can review it? One, you can take a different position. What is 148? Whether 6/19 itself is valid, has it transgressed beyond 148? No arguments have been advanced to the effect that development rights by themselves constitute immovable property and cannot be taxed as they are neither goods nor services. None of the decisions, therefore, the benefits in land, what we discussed earlier, have been considered. Developer would market, book and sell much before the CC and does not wait for the CC. Sales would happen much at the stage of construction, and only if market is sluggish, there will be some sales after CC. Therefore, conclusion that developer has no right to sell does not appear to be correct. So maybe all this will be tested before the Supreme Court and before some other High Court at some point of time. So I've captured different sector-specific issues in terms of controversies, but as I said earlier, the GST from 17, it's been like this, and I don't think any reforms are happening with the way thought process is there on how to tax popcorn, how to tax hotels, etc., how to tax restaurants, and the more they say they'll simplify, I'm getting scared. In fact, some people said, sir, we have a very complex system for popcorn. I said, you are only aware of popcorn because it came in the news. I am dealing with so many other products. With soda, one effect. Without soda, one effect. With fruit, one effect. Without fruit, one effect. Drones. There are four categories of taxation for drones. At different rates will apply. And you have this famous dispute on whether something is an automobile part or not. 28 versus 18 dispute. Everywhere you have classification disputes. You have disputes as to whether it is pesticide or herbicide, fungicide or herbicide. So we have all those. Hospitals are not spared. You are doing healthcare service, it is exempted. No, you are not doing healthcare. You are selling the stent at MRP. I am not selling here, I am fixing. I am not opening one shop, showroom hai, look at the stocks, you can test it, keep it yourself, see if it is happy, then we will fix it for you. You are at a heart attack at a table, doctor decides to put the stent. It is not a sale of stent. But you are charging the MRP on it. Therefore, you have charged with the tax. You pay that tax. So all kinds of dispute, healthcare, education, you name it, you have it. And therefore, GST is a ripe topic for various conferences forever, as well as professional practice. Thank you once again to both the organizations for calling me here. And thank you for your patient hearing.
So we thank you for your engaging presentation, your expertise and rich experience with a pinch of humor through practical life examples were skillfully woven to illuminate complex concepts, resulting in a clear understanding benefiting one and all. It was undoubtedly a privilege to hear you at the Tax Conclave 2025. Thank you so much, sir.
And thanks to all for calling me again.
Sir, on behalf of the conclave organizers and the participants, I would request if we could open the floor for one or two questions. Ladies and gentlemen, the floor is open for a question and answer round. Please come up in case if you have some queries. Yes, sure.
No, if you are issuing his question is whether I can issue a commercial credit note not get hit by GST. You can issue a commercial credit note or a financial credit note. You will not be governed by section 34, but you will lose the GST already paid. See, what happens in a financial credit note or a commercial credit note, whatever paid as GST remains paid as GST. Whatever availed as ITC remains availed as ITC. So both are not disturbed, both are happy in some ways. Whether it will get accepted or not, it will be tested, but there are VAT judgments which said financial credit notes have to be treated differently. Not required, not required.
Yes, please.
Good afternoon, sir.
Just hold on, just hold on.
Asking the receiver to reverse
They're asking. Yes, sir.
Good afternoon, sir.
Good afternoon.
Sir, I wanted to ask a question that what is your opinion about the restriction given under section 140 subsection 3 clause 4 wherein a assessee cannot transit the credit in respect of the goods held in stock as on the appointed day in respect of which invoices or the documents are before the 12 months of the appointed date, and can the provision be challenged on the basis of constitutionality because it restricts the transitional credit that the assessee had in the previous regime?
Good question. Recent trend of judgments are saying that GST is no different from the past, and therefore I should not be unnecessarily denied benefits which were available to me in the past law, which you changed in the terms of new law. I'll give you an example. I fought a matter and won. We had a client who had VAT TDS credit. VAT TDS credit can be set off only against VAT. Whatever VAT TDS credit which he could not set off and was accumulated in the VAT regime, he transited into the GST regime. Now, GST regime does not even provide for a mechanism for this. 140 does not even cover this. Department said 140 does not cover this. I argued saying 140 must be purposefully interpreted to give benefit of whatever accumulation that I have in the past. And therefore VAT TDS was granted to me. So like that you have to argue.
Yes, we take the last one. Yes, sir.
Charitable institution, what is the impact of GST renting out the property or entering into contract for leasing out the premises?
My friend is there. I have given him an opinion long back on this, on charitable institutions. Yeah, that question keeps coming up. The question is very simple. Is the trust willing to fight? If the trust is willing to fight, then it can take a stand that none of these are in the course or furtherance of business. Because supply will have to be in the course or furtherance of business, and none of these activities can be called in the course or furtherance of business. I am only achieving my objects of the trust. For that, I need this revenue to meet those expenditures. But if the trust is not, obviously, I would not recommend that action side, because trust is trust, because that money is required for your trust activities. Then you decide which are the commercial things in your mind, like renting or something like that, and then keep that alone as liable to GST and pay off the GST. So two views depending upon your appetite. But first argument is still valid, that it is not in the course of furtherance of business.
Yes, please.
But you also have to ensure you comply with 11.4, 12A, etc., because that business part in income tax also is important.
Yes, please.
Last question. I have to 210 is my boarding.
So my question is on the part of the valuation. When the trademark is registered in the name, the trademark is registered in the name of a partner, and the partnership firm has used this trademark. There is no consideration between the partner and the firm. Now, what can be the valuation? The proper officer, the audit department wants to levy tax on the transfer of use of this trademark. Now, what can be the valuation?
But in accounting, would you not take it somewhere as contribution from the partner?
No.
How will somebody give something free to the firm? It has to be either a loan or a capital.
No, because it is the brand name and the construction activity, the developer, because the partnership firms are keep on changing. You know, today they are making business with ABC partners, and tomorrow they are doing business with DEF.
So you're talking about an overall name standing somewhere else.
Yes.
Because
absolutely.
you create SPVs for different projects.
Absolutely.
Yeah, that's a burning question, where there are two ways of looking at it. One, you can look at all parties are related. Therefore, even if you have not charged anything, it should be taken as nil value. That circular is there. You can rely upon nil value circular. Value can be zero, because that's what the board said. Even if you have not charged, nil value can be taken. The second way of looking at it is whether it is really a trademark as defined or is the name of the company. Whether it is a trademark for IPR purposes, whether it is a trademark for Trademark and Service Act, or is it nothing but the name of the company. See, Hindustan Lever Limited may not be the trademark. The product name Margo, the Hammam could be a trademark. So if you are able to draw that line of distinction,
Okay.
then you may say that section itself is not applicable.
Okay. Sir, can you refer the circular number or I'll have to search?
It is there in the PPT. I'll share it with you as I go out.
Thank you.
Sir,
Last question.
very quick last one.
Sir, all 137 reference are only to take one more umbrella to say that there is fraud. Go back to basics. Sir, please sit down. Fraud, suppression, collusion, willful misstatement to evade payment of GST are powerful terms. Very powerful terms. You have to demonstrate where is my fraud. I am calling something as a microphone, you want to calling it as mic, that is not fraud. A classification dispute is not fraud. A valuation dispute does not become fraud. Have I evaded? Have I done some nonsense? Have I fabricated records? Have I falsified transactions? Then that is fraud. So, the ingredients of fraud is not something that misses taxation. So, look at the show cause notice, and when he says 74, you would have given 2 lines to justify 74. Hit that. Please show how fraud is there. Another advantage is just spend some more time with the company and see what all letters they've got from the department so far. Assessees are also very, very not that savvy. They'll give you only that show cause notice to you. You ask them, have you had correspondence before? Sir, 3 years back they came for audit. What happened? They made some observations. What happened? I accepted 6,000 rupees liability, I paid off. They also accepted. That audit would be an elaborate audit seeing the very same transaction. Having seen that, how is it fraud now? So don't bother about 137, hit 74. If you're able to get out of 74, there ends the matter. Thank you very much for your patience.
So your willingness to engage with the audience and clarify their doubts is highly appreciated, sir. I would like and request, sir, to felicitate the dignitaries on the dais very quickly, beginning with Advocate Jignesh Shah, sir. Followed by Rakesh Thakkar, sir. Let us make it a little quicker. Advocate Pritesh Gandhi, sir. Advocate Vasant Patel, sir. Advocate Ramesh Kachrani, sir. Advocate Nitin Vadodaria, sir. And finally, Advocate Sunil Keshwani, sir. This marks the end of the 5th technical session, and I request all the dignitaries to please come forward for a quick group photograph. Let us all make it quick. I request everyone to move ahead for the lunch, and we shall gather here again sharp at 1:45 p.m. for the 6th technical session by CA Dr.